How's it going, everyone? It's Sam. Today I want to go over two different adult stocks that people like to play with, and that is Play Stock or Dave & Buster's, and then LCA slash Golden Nugget. So we're going to talk about both of those, and just know before we get into it, I'm not going into enough depth to do your investing just based on my analysis. Make sure you do your own. I'm not a financial advisor. I'm not giving financial advice or telling you should buy these stocks or not buy them. I'm going to talk about why I'm not buying them or why I'm buying them. And I just want to say before we get started, if you don't mind hitting the like button, that really helps out the channel, and consider subscribing. First of all, I want to say thank you to everyone that voted. A couple weeks ago, or just about a week ago, we hit 600 likes on a video, and I said that if we hit that, then we would do a dedicated video based on any one of these 10 stocks that I laid out here. And I realized I put Tapestry in there twice, but the two top stocks were actually Dave & Buster's and Shell. So I plan on talking about Shell a little bit, but there have been a lot of different videos that have talked about this, and I realized that there are a lot more votes in this poll here, so it really should be Shell. But we're going to talk about Dave & Buster's today, and then in the next day or two I'm going to post a video on SPACs just in general, so be on the lookout for that. Subscribe if you haven't subscribed so you can see that. But I want to go over Dave & Buster's and then also talk about Landcadia, Golden Nugget, Landcadia Holdings 2 / Golden Nugget, and talk about them because I think they're kind of in a similar space and I haven't talked about them before, and I want to. So let's look at Dave & Buster's. So Dave & Buster's, if you don't know what they are, they're kind of an adult play store, but they have arcade games and different kinds of fun things to do there. They have alcohol, they have food. It's like a adult arcade, essentially. I've been to one myself. Awesome place to go, really fun, really easy to spend, like $60 or $100, a couple $100 just in a night on some video games. A really good business model in normal times. And as we can see here, it was about a $48 stock, and it's gone down to $12 now. So it was down even further when we were kind of in the depths of the shutdown and we weren't sure exactly if Dave & Buster's was going to be able to get out of it. Now they're up a few 100% since then, and I want to go through kind of where they're at now, but let's start with the financials. So revenues over the last few years, they've been increasing pretty nicely here. So almost 900 million, then a billion, 1.1 billion, 1.265 billion, 1.35 billion. Something I love seeing. I love seeing revenue increase like that. I mean, it's a pretty significant amount to go up in just 5 years there. If we go down to their net income, same thing pretty much. So the last couple of years they dipped a little bit, but they were increasing pretty steadily, still at a good pace there. And then just looking at the earnings per share, you're talking about $3 a share in earnings, which is awesome to see, especially when you consider this a $12 stock. So if they were able to produce these earnings again, you'd be looking at a PE ratio of about 4 if the price was around the same amount. Now, if we're looking at their balance sheet, this is what caused them to have some issues and caused there to be a lot of concern about the stock in general. So it's a pretty large company, honestly. So it's a $600 million company, and they had just a few million in cash and short-term investments, so about 20 million. And they have a lot of long-term liabilities. So they have about 320 million in long-term liabilities. So for a while there, people were really worried about their debt load. But they've been able to shore up a lot of cash, and even since the last report they have more. I'll talk about that later. But they have some receivables here, and they have a good amount of total current assets, but they still have these liabilities here. But I think that's a lot less of a concern than it was before. If we look at their book value per share, about $5.20, so that's not horrible either for what the stock is trading at. Now, I will say that they have been shut down for a while, like a lot of these different stocks and companies have, and they are reopening some locations. They have spacing for different games and stuff to try to keep people socially distanced. They are trying to open at the peak time, so when they made 90% of their money, that's when they're opening. so that way they can kind of limit exposure. They also cut their dividends, so typically they pay a nice dividend amount, but they cut their dividends. They would normally pay about 5% for the dividend yield, but they cut them, which is going to save them a good amount of cash. They also have been able to draw up some cash, so they have about $255 million worth of cash as of mid-June. And as you can see here, this article on Motley Fool actually talks about how they have been at a very low price to sales ratio of just about 0.51. So it's averaged about 1.81. So you can see that it's at a big discount now. But you can also tell that they're in a tough situation right now with everything that's going on in the economy, everything being shut down. But I think this is a stock that could do pretty well over the long term. They're at a really deep discount, so they're still only about a fourth of the price that they were before. And this is a company that I really like. I think this is a cool type of thing to go and do on like a Friday or Saturday night. I think it's family friendly enough that kids go to, and it's also adult friendly enough that you can take 4 of your buddies and go there for a night. So I think it's a good business plan. The question is just whether it's a good value, because I think they'll continue to grow over the next few years, and that's really where the risk comes in, right? So are they going to be able to get past it in case, let's say, the economy shuts down or there's another flare up in cases, which I see the chance that the economy shuts down again very, very minimal, if at all. I don't think that's going to happen. The government doesn't want that to happen. The companies don't want that to happen. The employees don't want that to happen. So I don't think that that's going to happen. But is there going to be a sentiment? So if the virus cases keep going up, are you going to want to go to something like Dave & Buster's and mingle with a lot of other people? But I think that over the long term, I'm pretty bullish on this stock. I honestly would invest in it. I'm not invested now, but I would invest in it. I just only have so much to invest, and I have to pick my stocks and pick which ones I really want to invest in. And so far, Dave & Buster's just hasn't been one of them. But I think that it's a really good quality company, and I think that if I have more money at some point that I can allocate towards Dave & Buster's, I'd really like to do that. Now, it also says here that they're expecting the company to only have this year as a loss. So they're expecting next year, in 2021, for the company to actually report earnings of 39 cents a share. So that's very encouraging. That means that they'll be back around a 30 PE ratio, but that's good just to see that they aren't expecting them to lose money next year. Now, the next stock that I want to talk about is a similar type of stock in the sense that it's for adults and it's for kind of playing games and having fun, and that is Landcadia Holdings 2, or also known as Golden Nugget. Not really known as Golden Nugget, but they're acquiring Golden Nugget. So as you can see here, they were an $8 to $10 stock, and then they announced that they were going to acquire Golden Nugget, which is an online casino, which I love the idea of this. I think it's one of those things where they could get a ton of business, and I am cautious about this stock, and I'll go through why. But this is another SPAC. So if you haven't heard of SPACs before, they're special purpose acquisition companies. A lot of the time, these companies are formed with the sole purpose of just buying another company, and they take over the company. It makes it easier for the people that own the company before to transition to a public company. So a lot of the time there's a lot of difficulty with trying to start an IPO. There's a lot of regulations, and it's easier a lot of the time for the SPAC just to go and buy a company and then absorb it. So it also makes it easier for the owners that had it before, because it's easier to transition to just having one person that you kind of have to pitch your company to. And then if they're on board, then you can have them absorb you or buy you out. So that is the general idea of what a SPAC is. Now, if you haven't heard of SPAC specifically, but you've heard of Nikola Motors, if you've heard of DraftKings, if you've heard of Virgin Galactic, a lot of these companies are either SPACs or being absorbed by SPACs. So there is a lot of news about them in the market right now. But let's look at Landcadia Holdings, because they have an interesting story. So Landcadia Holdings 2 is a SPAC co-sponsored by Fertitta Entertainment, and Jefferson Financial Group. Fertitta Entertainment is owned by Tillman Fertitta. So he is a billionaire out of the US. And Golden Nugget is an online real money casino owned by Tillman Fertitta. So he's buying his own company with another company. It's a quite interesting situation. So like I said before, a lot of the time the companies buy the other companies just because it's easier for the private company to become public through a SPAC. But in this case, he's buying his own company. So Tillman Fertitta took out a $300 million loan to help his entertainment empire during the crisis. And that $300 million loan is being absorbed by the new entity. So he is having his loan absorbed. Now, half of the loan will be paid with cash in the SPAC trust, while the other half will be assumed by the merger LCA and Golden Nugget Online Gaming. So he's going to get rid of some of the loans that he owns. Now, the debt that will weigh on the Golden Nuggets gaming path to profitability is 14%. So as they say here, that loan that they're going to have is going to be massive and at a massive amount of interest rate. So this is a very new company that they're going to have, and they're going to already start off with a 14% interest rate. And they're also going to have $24 million that goes towards debt repayment fees. So they're really going to have $174 million in cash going towards the debt that's inherited from their parent company. And they're also going to have $30 million cash that goes to Golden Nugget's parent, Fertitta Entertainment. So that leaves the company with $88 million in cash and $150 million in debt at a really high interest rate. So you can go read this for yourself too. I won't try to explain it any more than what I just did, but to me it sounds very shady. So this is something that I'm not really comfortable with. When you're using some of the cash to pay your other company like that, and you're going back and forth with huge repayment fees, you're loading up the new company with a huge amount of debt right off the get-go, that just doesn't seem right to me. That's not something that I'm really excited about. Now, I could be completely wrong. If you have pointed out something or you know something that I don't, or I misinterpreted something, please leave it in the comments below. But I think that there are just other alternatives to investing in this. So there's another online betting casino. You could also invest in brick and mortar casinos. You can invest in the hotels that are attached to the casinos. You can invest in something like PlayStock. To me, it just seems a little bit shady, and I could be proved wrong. And if the price goes down long enough or low enough, or some different news comes out on the stock just in general, I might be buying it one day. But I just feel like the large debt holding down their profits is going to be a lot to have to handle early on, and it's just something where I don't feel good about it. So I'm just going to hold off on investing in them. So that is kind of where I'm sitting with that one. Now, again, I am going to do some videos about SPACs in the next few days, or at least one video on SPACs. So if you haven't already subscribed, please subscribe. If you don't mind hitting that like button, it really helps out the channel. And if you guys want to start investing in either of these companies through some links that I have below, if you sign up with WeBull and deposit $100, you can get 2 free stocks, one worth up to $1,400. I really appreciate it, and I will see you in the next video. Thanks.